Hello everyone and welcome back to the Web3 Daily. Let's do a quick run through of today's market. After looking at the numbers, I'd say the overall market trend is, well, subtle. Bitcoin's price is hovering around the 190 range, and over the past 24 hours, it's been pretty much flat, barely moving more than a fraction of a percent. But if you shift your focus from Bitcoin to Ethereum and some of the other altcoins, you'll see a completely different story. While Ethereum is down slightly, it, along with coins in hot sectors like DeFi, AI, and gaming, is showing strong capital inflow. To me, this isn't just a simple dip. It feels like a major capital rotation is happening quietly in the market. We've always talked about Bitcoin as digital gold and Ethereum as digital silver. It seems that now, capital is slowly shifting from the digital gold narrative to the Web3 infrastructure narrative. However, even with all this sector rotation, the fear and greed index is still in the fear zone. This shows that everyone's sentiment is pretty cautious. There's none of that bull market frenzy where everything just pumps. So this divergence in the market is also raising more questions and discussions about the word bull market. We all know this bull run started late last year and has been going strong. But with the recent market volatility, a lot of people have started asking, is the bull market still here? I've been asking myself the same thing, wondering if this is just a normal dip within a bull market, or if we've actually hit the end of the road and are starting to turn. To be honest, seeing all those bullish reports makes me feel pretty grounded. For example, some analysts are saying Ethereum could hit 8.0 by the end of the year, pointing to the non-stop flow of big institutional money into Ethereum spot ETFs. That momentum seems impossible to stop. Others are talking about a liquidity supercycle and the potential for the Fed to cut interest rates, which are both major tailwinds. And hey, Bitcoin's Golden Cross technical signal has formed, which has historically been a strong sign of a continuing bull run. But on the other hand, I've also seen a lot of perspectives that we can't ignore. The leverage in the market is insane right now, and we all know what that means. Any slight movement could trigger a cascade of liquidations. Plus, global regulations, especially here in the US, are a double-edged sword. While some aspects are positive, the risk of a regulatory crackdown is always there, hanging over us like a sword of Damocles. And with crypto becoming more and more correlated with the traditional stock market, if equities get into trouble, we'll likely follow. So my take is that the overall bull market trend might still be intact, but the rhythm has changed. It's no longer that frenzied, go all-in mode where everything just pumps. Now it feels more like a test period, challenging our patience and our ability to manage risk. It's forcing us to ask, is this mid-bull run dip a good opportunity to add to our positions? Are those highly leveraged trades really worth it? Personally, I don't think this is a time to sit back. It's a time to be more rational and cautious in evaluating every opportunity and every risk. Now let's dive into our first major news story of the day. We've been talking about institutional adoption for a while, but this news about Japan Post Bank, honestly, my first reaction was, this is no ordinary institution. This is a financial behemoth entering the arena. This bank manages over 1.29 trillion in deposits, and they've now announced a plan to launch a digital currency called DCJPY in 2026. You might be thinking, big deal, another digital currency. But this is different. DCJPY isn't a typical stablecoin. It's a permissioned network designed to allow their depositors to instantly convert their savings into digital currency to trade on-chain, blockchain-based assets. When I saw this, I was actually a little stunned. Think about it, a traditional financial giant of this scale, one that might have looked down on crypto before, is now personally stepping in to connect the massive capital of the traditional world with our Web3 world. The implications of this are huge. Behind this project, alongside the Japan Post Bank, are other Japanese financial giants like MUFG. What does this tell us? It's not just a single company's decision, it's a collective move by the entire Japanese financial sector into the Web3 and blockchain space. They're hoping to attract younger customers, improve trading efficiency, and grab a foothold in the global digital currency race. Of course, some might argue that this type of permissioned digital currency isn't aligned with the decentralized ethos we're used to. It's more like a digital token controlled by a centralized institution, not a true cryptocurrency. This reveals the paradoxical mindset of traditional finance. They want to embrace Web3 technology, but they also want to maintain control. But regardless, I think this is a good thing. It shows that the distance between the traditional and Web3 worlds is shrinking fast, and more digital currencies will emerge, which will only increase the overall acceptance of crypto assets. Alright, let's look at the second piece of news. This one involves Michael Saylor, the founder of MicroStrategy. And when I saw it, I honestly felt that this guy has true love for Bitcoin. The latest news is that MicroStrategy has once again used borrowed funds to buy approximately 50 more Bitcoin. This isn't the first time they've done this, but every time they add to their holdings, it feels like he's showing everyone what it means to be a true long-term believer through his actions. What's more, I found an even more important piece of news. The tax fraud allegations against MicroStrategy and Saylor himself have been officially dropped with prejudice. This means the prosecution can't file another lawsuit on the same grounds. This is no small matter. It not only clears Saylor's name from legal troubles, but also acts as a massive confidence booster for all public companies holding Bitcoin, and for the entire crypto space. Think about it. A public figure heading a US-listed company has been accumulating Bitcoin on their balance sheet on a massive scale for a long time, and now they've passed this legal test. This sends a very strong signal to the outside world that Bitcoin's legitimacy and compliance are being accepted by the mainstream. For us, crypto investors, this is huge. It means Bitcoin is no longer a niche investment. It's being embraced by more and more large corporations and institutions, even being seen as a legitimate asset for hedging and value preservation. In my opinion, Saylor's case is becoming a textbook example. He's not just stacking sats, he's paving the way for the entire industry, using his company as a testing ground to show the world Bitcoin's potential. While there's been controversy and risk along the way, it now looks like he's winning this big bet, step by step. For anyone who believes in Bitcoin, this is a reason to cheer. Let's look at another interesting piece of news, this one involving President Trump. Have you noticed how popular a coin called Trump has become in the crypto market recently? When I saw that, I wondered why. And now it seems there's a story behind it. Reports are saying that the Trump family is launching a brand new stablecoin called US Dong. When this news broke, I felt like the line between politics and the crypto world had been crossed once again. And with this deal reportedly involving a massive $750 million investment, it's clear this is no small matter. The stablecoin is supposedly being led by Trump's son, Donald Trump Jr., in partnership with a company called Wave Financial, which they've worked with before. But what I want to highlight is that there's a lot to think about with this news. On one hand, a presidential family is publicly and aggressively entering the crypto space and launching their own stablecoin. This is a huge endorsement for the entire industry, especially for traditional investors. It's a strong signal that crypto has moved from a fringe technology to the center of the mainstream political stage. On the other hand, there's a lot of controversy and potential risk involved. For instance, some reports point to potential insider trading and conflicts of interest, and the stablecoin's issuance will face complex regulatory challenges. Regardless, I think the event itself says it all. It reminds me of how Elon Musk endorsed Dogecoin and how El Salvador adopted Bitcoin as legal tender. These events are telling us that the crypto world is being shaped by more and more non-traditional forces. It's no longer just a playground for tech geeks and financial players. It's deeply merging with the politics, economy, and even social events of our real world. So my personal take is that we shouldn't simply see this news as a political figure stunt. We should see it as a significant milestone in the history of crypto. Now, let's talk about some legal news from India. This story sounds like something straight out of a movie, but it's completely real. An Indian court recently ruled on a 2018 Bitcoin extortion case, sentencing 14 people involved to life in prison. My first reaction to this news was that the sentence was incredibly harsh, but it also shows that the Indian justice system has zero tolerance for crypto crime. In a nutshell, a businessman was kidnapped and extorted for 200 Bitcoin, but that's not all. Even more ridiculously, among those sentenced were a former local politician and a police superintendent. This made me realize that criminals' infiltration into all levels of society is far more complex than we imagine. There was also a particularly interesting detail in the report. The businessman who was extorted was himself later indicted for being involved in a similar extortion case. It's almost comical who's extorting whom here. I feel this news serves as a crucial reminder for our Web3 world. It tells us that the world of crypto isn't a lawless place. While it's decentralized, real-world laws and regulations are right behind it. Governments worldwide are stepping up their efforts to combat crypto crime, and legal actions by a country as large as India will undoubtedly serve as a reference for other nations. So, this story isn't just about a crime. It reflects that, with the popularization of crypto, it's attracting all sorts of people, including those who try to use it for illegal activities. Therefore, As investors, while we enjoy the convenience and benefits of crypto, we must also be aware of the legal and security risks behind it. Next up, let's talk about Solana. As a public blockchain, Solana's latest technical upgrade has caused quite a stir in the crypto community. They're testing an upgrade called Alpenglow, which might sound a little romantic, but its effect is anything but. The core goal of this upgrade is to slash the finality time for block confirmations from 12.8 seconds all the way down to just 150 milliseconds. When I first saw that number, I honestly wasn't sure if I was reading it correctly. What does 150 milliseconds mean? It's the blink of an eye. What does that mean for us as Web3 users? It means any on-chain operation we do, like trading items in a game, borrowing and lending in DeFi, or even high-frequency trading will be as fast as traditional financial systems. That's absolutely groundbreaking. Of course, there are some dissenting voices in the community. For example, a core Bitcoin developer has raised concerns that pursuing extreme speed might lead to compromises in decentralization and security. This is a familiar debate in the blockchain world, often called the impossible triangle. So this Solana upgrade isn't just a technical leap, it's also sparked another big discussion within the community about the balance between speed, security, and the decentralization. Regardless, I think Solana's attempt is highly commendable. It represents the next frontier in public blockchain competition, how to maximize efficiency while ensuring security. It also shows the world that technological innovation in Web3 is evolving at an incredible pace. Alright, for our final piece of news today, we turn to El Salvador. When I saw this story, my first thought was, wow, this country really knows how to play the game. El Salvador has announced that, in response to so-called quantum computing threats, they've taken all of their country's Bitcoin from a single wallet and split it into 14 new wallets for storage. This sounds a bit out there, right? A quantum threat sounds like something from a sci-fi movie. I did some research, and theoretically, quantum computers do have the potential to break the encryption we currently use for private keys. But I also saw some experts say we're still a long way from a true quantum threat, and we're constantly developing new quantum-resistant encryption algorithms. So I don't think El Salvador's move is simply out of fear, but rather a preemptive stance, or perhaps a high-profile technical statement. Behind this decision are a few key takeaways. First, it once again underscores El Salvador's long-term commitment to Bitcoin. They haven't sold their holdings. Instead, they're taking steps to better protect them. Second, they've split the Bitcoin into 14 new addresses, with each holding no more than 500 Bitcoin, and have made all these new addresses public on a new dashboard. This is not only for security, but also for transparency. It answers the previous questions many had about how much Bitcoin the country holds and where it's stored, making El Salvador one of the most transparent Bitcoin holding nations in the world. So I think El Salvador's move, while it might seem a bit ahead of its time, sends a very positive signal. A sovereign nation is taking the security and transparency of Bitcoin as a serious national asset. This sets a precedent for other countries and shows the world that Bitcoin's future isn't just as an investment, but as a national-level asset that can be treated with the utmost seriousness. Alright, that's all for today's Web3 Daily. If you found this helpful, please remember to hit the like button to show your support. We're here every day, sifting through the Web3 world to bring you the most valuable and wealth-related core information. We hope that by organizing these hand-picked stories, we can help you make more rational and informed decisions on your Web3 investment journey. Plus, I've put our exclusive registration links for all the major exchanges in the comments section. These are high rebate deals we've secured for our fans, and we hope they can help you save on your investment costs. Let's stay rational, move forward steadily, and get rich slowly in the Web3 world. May all your crypto assets grow steadily. See you tomorrow.